We're very pleased to be joined today by
NTT Data, the global IT innovator, consulting and service provider, helping clients in their digital transformation.
Today, Carlos will share with us
Key insights from their new Intertech Global Outlook 2024 report, diving into the latest trends, innovations and opportunities, shaping the future of the industry.
Please welcome Carlos Ordóñez.
Okay, thank you very much. Thank you, ITC, for the invitation of NTT to participate 1 year more in this great event. This report today, I want to explain you a little bit a summary of our report. This Insurtech report is the 6th edition that we do. Most of you know this report in the market. It's a 250 pages document and really deeply information about what is happening in the Insurtech arena, what the insurers are doing with that ecosystems, what are the new players, the new entrants, what the tech giants are doing. Really interesting if you want to download our paper in our website, insurance.nttdata.com. But we suggest to you normally that when we promote this paper is that you take 1 week of deep analysis of that information, because I'm sure that you will find a lot of deep insights that you can apply in your companies. Then today I will try to do a quick summary of what you can find in that paper and how it's structured this year. When we start about the Insurtech, we want to understand if this is a bubble burst or is just an adjustment of the market, and then we are starting to understand how is moving forward the investment, as our colleague of McKinsey that was saying that is decreasing the investment. As you can see here, the investment in the last period of time is decreasing. How much money is in investing in the Insurtech arena? But we feel that this is not just a bubble burst, it's focusing on where the money is creating more value. Also, another key challenge we are seeing now on the market is the uncertainty of the market itself, where a lot of new emerging things are coming, and how these new topics of volatility and uncertainty is affecting to our market. Then the first thing is how we are understanding if this is a bubble burst or a natural adjustment. The first things we did is to compare the different periods of investment, where we were moving on shifting from a period of growth market to a more located investment period, where the insurers and the investment funds are really deciding in which topics are more relevant to be invested. Then they are investing less, but they are investing more accuracy in specific emerging topics. Also, if we found, we done a study of how the IPOs and the public insurtechs in the last years were evolving, we saw in the previous period that a big decrease of the share pricing in the market, but in the last year, in the 12 months, we have seen an increase of them of 46%. And this is because all these kind of business models are doing things well. They are decreasing their operational costs, and you will see later and how some examples how they are evolving and adapting their business to the reality of the insurance sector. Also, in that paper, you will find a lot of information of what the insurers are doing, where they are putting their money, in which topics they are investing. And as you can see, the main insurers are investing in topics like embedded insurance, but also in telematics, in life, and all that topics. But inside of the paper, you will find a lot of information of what are these investments, these alliances, in which topics, and which clusters we are looking for, we are seeing. Here we are seeing that all the main insurers are investing in 3 main clusters. The first one is distribution, and then embedded insurance is one of the key topics, and the B2B2C platforms, and how we are helping these new entrants, new incumbents, to lead that liquid ecosystems. This is one of the key topics. The second thing is that we call beyond insurance, where we are seeing how in the life ecosystems, employee benefits is a key topic, how we are helping the customers to understand to be healthier. to the companion of the insurers to the lifestyle of the customers. And for that, topics like employee benefits is a key topic, but also UBI and how we are going with our customers in the car, understanding how they are driving, their behaviors. This is something interesting that you will see some examples later. And also all the impact of the deep tech and how they are improving the value chain, the operational things about Gen AI, basically is how they are more efficient operationally using big technologies, and also interesting new risks like cyber risk. That is a key topic that is growing. This year, we try to analyze a bigger picture and how was the different waves of investments in the different periods of time. In the last 6 years, we were doing this paper, and we defined 3 different waves where technology and investment are evolving. And it's interesting to understand in a medium-term strategy how this market is evolving. The first wave is that we call digital insurance, where the new incumbents that basically was InsurTech, that offering end-to-end possibilities to become an insurer, that with a great experience, with a different way to approach to the customers, how the insurance can be in your life. This is mainly was focusing on B2C. Then we had in 2020 a second wave, what we call connected insurance, where all the concept of liquid ecosystems was really key. Understanding how the customer were served in an holistic way by the insurer or by the leader of that ecosystem, where they need to be protected, but of course, not just in terms of risk, but also in terms of prevention. Then how the collaboration was the key topic of the insurers with the InsurTech and the ecosystems to really provide this new service or this holistic service to the customer. And now we are perceiving a third wave that we call generative insurance, where this deep tech is something that is affecting a lot, and this week we will talk a lot of Gen AI, of the new technologies, of course quantum computing in the future, but we will see how these new technologies will really transform the way we are serving the customer, but the way we are mitigating this emerging risk and closing the protection gap that we found in the market. Then it's really interesting how technology is helping to the sector to evolve on these needs in the future. Then inside of the paper, you will find different sub-paper, one paper per wave, where you will find deep dive information of what is happening. In the first wave, that was how these new sexy insurance were entering in the market. But now we are seeing, and McKinsey was commenting that now they need to become more profitable. And then profitability was key topic. Lemonade was one out of the most famous cases in this wave, where we are seeing how Lemonade was expanding in the different line of business, how they were using the same approximation of customer experience, wow effects, to really show to the customer how they can consume these insurance services in a different way. Of course, they are starting to understand holistically better to the customer and then offering better services, cross-selling, and step by step they are moving to become more end-to-end insurance company for any type of services. Of course, they acquire companies like Metromile, where they are entering in different part of the ecosystems with different strategies, not everything done from scratch internally. But if we see in detail this company, we have seen that they are doing things good, because they are becoming more profitable, they are improving a lot the operational efficiency, the margins, they are improving the customer retention, then understanding this kind of business and this kind of companies is showing to the market that, of course, we will need time, because not all insurers can be profitable in the first year, but they are starting to show to the market that it's not just some fashion thing. It's something that in medium long term, they are starting to see that the loss ratio is really being under 100 and is starting to become a real profitable business. Okay, they're understanding this kind of companies and how the new insurers will use the technology like they are doing, more data-driven companies like they is interesting to understand best practice to be applied in your business. When we become the second wave and then the connected insurance, we analyze the concept of insurance ecosystems or liquid ecosystems, where we found 4 main ecosystems, as you know: mobility, life, home, and then business, protection. And inside of the paper, you will find what are the main trends, who is doing partnership with who, and some examples. But here you can have a summary where we are seeing that in the smart mobility part, UBI is a key topic. This trend was starting really hard last year in the US, and now it's starting to increase in different markets like Asia and now Europe. Then in terms of life, well-being is key. And how we are engaging with the customer in a day-to-day with well-being is key to really improve the way we are serving life and health. And today, the customer trends is, I want to be healthier in the future, in long-term period, because I will live more. But I want to do it not physically, but also in terms of economics. Then how life products and protection and savings are coming with health. And well-being will be the way how you interact and engage with your customers to really become a trusted insurer to be sure that my customers will be healthier. And then this promise, and with me you will be better, and we will have a long-term relationship, is something that we are seeing in the trends, and all the insurers are really focusing on well-being in all markets. Of course, prevention is a key topic, and we are moving from risk assessment to really prevention risk. And then in home, we are seeing a lot of examples of that. And then also topics for B2B, for business shield, parametric insurance, cyber protection, risk management, usage of new technologies is something that is key in these ecosystems. One of the examples where I want to show you is Progressive. Progressive is a key example how an insurer is doing, building an ecosystem, in this case for mobility, and how they did a great deal with Cambridge Technology, where they provide all the technological behind UBI for them, and also with all the partnership we did with General Motors or Toyota. They have a model where they say to the customer, okay, I will give you technology, I will cover you 1 month for free, but then you will drive, and then we will understand each other better. And after that, I will give you the final pricing, because I need to understand how you drive to suggest you the best pricing for you. The reality of that is that here we have a really good retention model. They start with the lead generation model, where after that they do a pricing accuracy, where we can see that 75% of the customers receive a discount. And this is key. But not just, it's important just the first time you give a pricing to them, but also when you renew these policies. And we have seen that they have a 6% higher renewal pricing in the good drivers, and 16 lower with when you are not good driver. And then this is good, because then you are starting to show to your customer that if you are good, it's better for you, but also it's better for me, because I will be more profitability. And the other side, if you are not driving good, then maybe it's not good that you are my customer, or I can protect to you, but you need to pay more. Okay, and then this kind of services, we have seen that they have a really good KPIs in terms of retention model. And I think that if you don't know this example, you can find it in the document. It's so interesting to see some use cases that I'm sure that take a lot of insights for you. And the final wave, that is the third wave, is the new area of the deep tech, the Gen AI, the AI, and how this new technology is affecting to the sector. Just if we are seeing the investment, we have seen that at the beginning of the period in 2018, more than 50% of the investment were in big bets. okay, in big financial bets, maybe Series D, Series E. Basically, the big insurers were investing, or the VCs were investing in big players, in lemonade, in this kind of big new insurtechs, investing a lot of millions in one bet. Step by step, they move to a 50-50, where they are starting to see new opportunities to complement their offering with the insurtechs. Is where we were investing in the connected services. But now is the first year that we have 75% of the investment is in Series E and B. Why? Because they are looking for niche players really allocated in these new technologies that is affecting in the value chain. And now we have seen that, of course, they continue doing some big bets, but less than before. And they are using the smart money to go to really new incumbents that I'm sure that this week we will show, we will see a lot of them here in ITC, where they can apply or they can implement value in your companies, in your value chain. Okay. Okay, then one of the examples I want to show you that I think is really interesting is MindFoundry. MindFoundry is a startup based on AI that basically is doing, this is just for car, for driving, for auto insurance, but they are identifying the signs of mental decline before become a problem if you are driving. They are using cameras, they are using telematics information to really follow you when you are driving. And they can see that this kind of damage is really high. It's 50% of the most expensive claims that a company can have. And then the approximation is not just to mitigate or calculate the risk that they have with a driver, but also is, as we said at the beginning, how we prevent. Prevention is key. And then this kind of companies, this kind of technology is providing a different angle, in a different way, how you approximate as an insurer the prevention with your customers. In this case, we are seeing that with some technologies that is embedded in your car, we can be sure that we can mitigate this kind of problems that happens, and the cost of that are really high. Okay? This is interesting because it's a really different angle that maybe some years ago no one was doing in that way. Okay? And then finally, as you can see, we have seen some trends, then some waves, understanding what happened in the last 10 years of investment on the market, where we are now. But the question is, okay, we will have one single winner, will be a way of collaborating. What is the answer for that? And here, just I want to give you some takeaways of this year. From the first wave, from the digital, from the B2C, what we need to understand is, yes, they can do better, but they need time. Okay? This is a long-term strategy. Okay? It's important that this kind of business, end-to-end, where they are providing a better engagement, better user experience, a different way to use the technology and data in my company, is something that works, but they need time. And of course, they will need money, because a big part of that business was dropping, going down, closing, because they have no more money. But now we are starting to see that step by step, the good models are starting to be profitable, and now they are starting to do impact, and not just in one line of business, in all of them. The second thing is that win-win ecosystem is key. Okay? We need to start to understand that how you are doing business, partnerships, with who is key. How you are serving your customer in a holistic way is key. And you cannot do everything. Then it's important that you find the right partners to really offer all the services that your customer will need in the future in this holistic way. Okay? And moving from risk protection to risk prevention is a key topic. And then how your company is tackling that challenge is something, or this question is something that you need to do internally. And finally, the generative insurers is where all this week you will listen. That is how the deep tech is helping me to really do better business. How we are using that technology to close the gap of protection, to mitigate the new emerging risk. and how it's improving all the value chain of my company. Then all these kind of new technologies are starting to prove that the value provided to the sector will be huge, and is a wave that is showing us that the real disruption is coming really soon and really rapidly. Then I suggest to you to go deeply in that paper and enjoy, because I'm sure that you will find a lot of use cases, trends, and patterns that I'm sure you will apply in your companies. Thank you very much.